if we don't see a market pullback soon, Dr. Faber says we may be looking at a 1987-like stock market crash all over again. So those are pretty strong words as Marc Faber joins us, the publisher and editor of the Gloom, Boom, and Doom report, on the phone from Thailand. It's a pretty big pullback you're looking for here, huh?
Not really. I think there are two scenarios we have to consider. First, a pullback that is a 5 to 10% correction.
Yeah.
And another rise into the summer, July, August, where the market would become really overbought and when we would have a speculative bubble in stocks. And from that level, we could have a crash.
We could see a crash.
Yes, definitely. We could also see a topping out process relatively soon, because I think what most investors overlook is the fact on March 6th of this year, we will be 4 years into a bull market that began when the S&P was at 666. 15 months ago, we were at 1,074 on the S&P. We're up almost 50% in 15 months. So we are very extended already now. Everybody says stocks are cheap.
Right.
That depends, measured against what?
I want to hear what other asset class and what have you. I want to hear your argument for that, because you're right. We've had a number of people come on here in recent days making the case for stocks being cheap on a relative basis and using all kind of metrics to do so. But I also want to take you back a little while, because we said you're the author of the Gloom, Boom, and Doom report. But lately, there's been a lot of gloom from you on the stock market. I know you were on with us back in November. I was looking at some of those comments that you made then, saying that we were looking at a 20% drop from the peak you figured in the stock market. We've actually gone up, not down since then. So, I mean, that obviously surprises you a little bit. But what about people saying, well, come on here. Here's Faber again, and he's saying the world's going to end. And
yeah, sure.
Right.
I am familiar with that theme because I've been through it so many times. When you're close to a market top, people don't want to hear that stocks can go down.
Right.
Because they will argue, well, we can't see any reason why they would go down. The opposite is, in March 2009, people could not see why stocks would move up. And a year ago in Europe, when Greece and Italy, Portugal, Spain bottomed out, people couldn't see why they would go up. They were always talking about the breakdown of the euro.
Sure.
And yet Greece is up 100% since then.
There's the market, by the way, since, basically since those comments I referenced from Marc Faber in November, right around Election Day, and how the Dow has done since then. It has obviously gone up. And the argument for the continuation, the one I referenced a few moments ago, is basically that the Fed is just so accommodative. They keep interest rates so low. And that if you look at other asset classes, and I know you started to make this comparison earlier, you say to yourself, well, what value do I have in the bond market? Not much. I better be in stocks. And you say what?
Well, basically, I agree that bonds are unattractive. But if bonds are that unattractive, maybe stocks aren't that attractive. Because if you look at the history of bond returns and equity returns over longer periods of time, they were very similar. They were not that far apart. In the 70s, stocks performed badly and bonds performed badly, but on a total return basis, they were still providing an annual return of roughly 7%, which was less than the rate of inflation.
So then what if not stocks?
Well, I prefer equities to U.S. Treasury.
Right.
But I think there may be other asset classes, such as real estate in selected locations, that may be reasonably attractive.
Oh, give us one location real quick, and then we'll wrap it up.
Well, a year ago, I wrote about how inexpensive properties were in Georgia, in Nevada, in Florida, and in Arizona. And since then, these properties have gone up.
Right.
I don't think they're that cheap anymore because the private equity firms have come in and bought thousands of lots, but they're still reasonably attractive compared to equities that I find to be on the high side, given that inflation flows somewhere, and I think it's flown mostly in corporate profits. We have a corporate profit inflation.
We'll keep checking back with you from time to time. One of the more influential names in investing around the world, Marc Faber. Thanks a lot.